Welcome to Talk Tickers. Today, we're digging into one of the weirdest earnings reports I've seen all quarter, and that's for Primoris Services. So get this, the company drops a record-breaking quarter, smashes estimates, and raises their guidance for the future. And what does the market do? It sends the stock tumbling. It makes no sense on the surface, so let's dive into this disconnect and figure out what's really going on.
I mean, if you just look at the numbers, this was a picture-perfect quarter. It was what we call a classic beat and raise. Primoris knocked it out of the park on pretty much every single metric you can think of. It really signaled that the company is firing on all cylinders.
And let's put a number on that, shall we? Wall Street analysts were looking for about $1.32 per share, while Primoris came in and delivered $1.88. That's not just a beat, my friends. That is a 42% crushing of expectations, the kind of number that should have investors cheering.
And it didn't stop with earnings. Oh no. The good news just kept on coming. Revenue and EBITDA were both up a whopping 32% compared to last year. They were just printing cash, over $180 million in operating cash flow. And their balance sheet, it's basically a fortress with almost no debt. And just to put a cherry on top, they confidently raised their guidance for the rest of the year. I mean, by every measure, this was a flawless quarter.
Okay, so everything looks perfect, right? Sunshine, rainbows, record profits. Well, this is where the story takes a really sharp and, frankly, unexpected turn. Despite all that amazing news, the market's reaction was, let's just say, less than enthusiastic. It was brutal. On the day they announced all this great news, the stock closed down more than 10%, 10.6%. How does that even happen? This number right here, it just screams that there's a huge disconnect. It tells us that the market was looking straight past these fantastic results and was worried about something else entirely.
So what gives? What on earth did the market see that could possibly justify this kind of sell-off after such a stellar report? That's the billion-dollar question we're here to answer.
And it really all boils down to two completely different narratives, two competing stories about the company's future. See, this wasn't about the quarter they just put on the board. It was all about how clear the path looks for 2026. And right at the heart of this whole debate is one key metric. And that metric is something called backlog burn. Now, think of it this way. Backlog is all the signed contracts a company has. It's their guaranteed future work. Backlog burn is how fast they're completing that work and turning it into revenue. Now, a high burn rate is great for today's numbers, but if you're not signing new contracts to replace the work you just finished, well, you could be heading for a big slowdown.
So let's break down these two competing stories. On one hand, you have management's narrative. They're saying, hey, we're just so good at our jobs that we actually pulled over $400 million of work forward into this quarter. They admit some new contracts were delayed because of tariff issues, but they swear these projects are just delayed, not gone for good. They're telling everyone the pipeline is packed. But on the other hand, you have the market's fears. Investors are worried that this pull forward just stole growth from 2026. They looked at the backlog, saw it drop by almost $1 billion, and immediately thought, uh-oh, the well is running dry. And you got to remember, the stock was already up 70% on the year, so this was the perfect excuse for nervous investors to just take their profits and run.
So what happens now? Where do we go from here? Well, the path forward for the stock is actually crystal clear. Management has to prove that their story is the right one. And it all comes down to one thing: rebuilding that backlog.
And management is adamant that they can do it. They're not hiding. On the earnings call, the CEO, David King, was about as clear as you can be. He said they are highly confident they're about to sign some major projects that will lock in a great 2026.
So this brings us to what you should be watching for. Here's your checklist. Number one, and this is the big one, they need to announce some major new contracts, especially in solar and gas. Number two, if we get some clarity on those tariff issues, that should speed up new deals. 3, they need to take advantage of what they see as a new boom in the pipeline business. And finally, with that amazing balance sheet, they have the cash to go out and buy other companies to fuel growth. The story has officially shifted from great execution to now replenishing the pipeline.
All right, so where does all this leave us as we look ahead to the next earnings call? We've weighed their incredible performance against the market's very real concerns about the future, and we've landed on our thesis. Our official rating is market perform. Look, you absolutely cannot argue with how well this company is operating. They are world-class, but the market is now in a total show-me mode. The fundamentals look great, but the stock itself is stuck in neutral.
Until Primoris announces those big awards they've been talking about, the stock is probably going to stay stuck in this range.
Now that brings us to our outrageous but plausible trade idea. The thesis here is simple. The market needs proof. The trigger will be when they confirm those big new contracts in the next report or two. So what's the trade? Consider selling cash-secured puts with strike prices below where the stock bottomed out after this recent drop. The thinking here is to use all this fear and volatility to your advantage. You're in a win-win. Either you just collect a nice chunk of cash, the premium, while the market waits for news, or you get to buy the stock at a major discount right as the company is confirming that its future growth is locked in. It's basically a way to get paid to wait for the good news.
And finally, of course, we have to do the quick, mandatory disclaimer.
So, just to be perfectly clear, this is not financial advice. Everything we've talked about today is just for informational and entertainment purposes. You should always do your own research before making any investment decisions.